morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a mixed start after poor economic data from the China and the US. Tata Chemicals will demerge its food and beverage business to Tata Global Beverages. The new entity will be known as Tata Consumer Products. Now, slower export growth led India's trade deficit to widen to a 5-month high. Hindalco is likely to report an operationally weak quarter owing to lower aluminium prices, which are seen impacting profitability as well. Bajaj Finance and Bajaj Finserv are the other two nifty companies reporting numbers today. Now, the Election Commission has curtailed campaigning in 9 seats of West Bengal after incidents of violence between workers of the BJP and Trinamool Congress. All right, let's turn to the action on Wall Street now. Stocks fell in early trade after U.S. retail sales were reported to be below estimates. However, benchmark indices staged a recovery after Bloomberg News reported that the U.S. administration is planning to delay auto tariffs by up to 6 months. Renita Young of Bloomberg News brings you the wrap of the trading day in the U.S. in this report.
U.S. stocks are rising on signs that the Trump administration is working toward easing trade tensions, with the S&P 500 headed for its biggest 2-day gain in more than a month after Bloomberg reported that President Donald Trump would delay by up to 6 months a decision on car tariffs that was actually due by Saturday. Now, that possibility actually helped to calm investors' fears and concerns about Trump's protectionist turn. Now, there is some anxiety that still exists within markets, though. The unexpectedly weak U.S. retail sales, along with data showing that China is slowing its growth, really did heighten concerns about a trade war that could weigh on the global economy that's already starting to stagger a little bit. And we can see that in the fact that gold is actually rising. Gold is typically used as a safe haven. Sometimes the U.S. dollar is as well. That is also rising versus major currency competitors, and so is the Bloomberg Dollar Index. Now, treasuries are also rising after the 2-year touched its lowest level since about February 2018, and oil is also rising above $62 a barrel. Meanwhile, earnings season is still happening, with Macy's first quarter bouncing back strong from a weak holiday season, and shares actually fluctuated between gains and losses on Wednesday. But Macy's warns that its forecast could actually get worse since it came out before the list of tariffs on Chinese goods. And this latest list includes handbags and furniture, which are 2 staple items at Macy's. And we do also have other earnings coming up soon. We'll have Beyond Meat, and we'll also have Cisco Systems, WageWorks, and Walmart. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's turn to the Asian markets now, and in fact, let's go straight across to Rosalind Chin, who's joining us from the Hong Kong studios, the Bloomberg Hong Kong studios. Morning, Rosalind. Just that the discussion or the discourse on a trade war seems to be dominating everything from headlines to markets this week. Updates with regard to the economy of China and the US, and that perhaps weighing on markets in Asia this morning?
Yes, over here the markets in Asia have not followed Wall Street higher. There have been, of course, some weak data which is weighing on investors' minds. So despite Wall Street's stronger close yesterday, yes, Asian investors here do seem to be rather bogged down by concerns about growth overall. We've got the MSCI Asia Pacific Index losing 0.4% right now. We did, of course, regarding trade here, that Trump did sign an executive order ordering that licenses will be required in order for companies to buy equipment from foreign telecom companies which are deemed to be a security threat. Of course, he didn't specify China, but that this order is expected to hit companies like Huawei and, of course, ZTE as well. 2 of the companies which have been caught up amongst political and trade issues relating to the US and China in the last few months as well. Trump also did mention that he's going to give the EU and Japan 180 days to agree to a deal to limit or restrict imports into the US of automobiles and their parts, partly in return for delaying new auto tariffs, according to Bloomberg reporting. So that, of course, will play into what's happening on the markets as well today. But Generally, we have seen the stocks that pull lower today. So the Nikkei down by 0.9%, the Topix down by almost around the same amount. Kospi down by 0.6% over here in Hong Kong. The Hang Seng losing 0.5%. China, of course, which also has just opened a few moments ago, losing 0.15% along with the CSI 300. So generally a pull lower today. Now, of course, we did see that there was unexpectedly weak data coming out of the US and China as well on Wednesday, heightening those concerns about the global slowdown, in addition to concerns already existing about what is happening with the global economy. On the stocks front, we've got Tencent, that's losing more than 1% right now. That's after some results yesterday which showed its growth at the slowest pace, in terms of sales at least, since it IPO'd in 2004. So a little bit of concern there. However, it has to be noted that there was a restriction on new games released in China over the last financial year, and that of course has hit Tencent. In Australia, we see the S&P ASX 200 making gains slightly. It's up just a fraction, up by 0.06%. We did have some employment numbers out at 9:30, so just a few moments ago. Now, these have been key because these really have been what the RBA has been watching in terms of whether it should be cutting its interest rates or not. There's been a lot of pressure for the RBA to cut. It has been looking at employment numbers as a way to gauge as to whether it does need to cut or not. It's been watching these numbers closely. We've got Australian employment increasing to 28,400 in April against estimates of 15,000. So that is a considerable beat there in terms of the number of jobs. So this, of course, may give the RBA pause to decide whether it will still need to cut at its next meeting. But of course, the elections are coming up as well, so there's a lot of political influence as well, which they are trying to resist in terms of what the RBA is going to be deciding to do next. So quite a few factors here moving economically, politically as well as corporate-wise in Asia that are moving things along here. Back to you.
Thanks so much for that, Rosalind. Well, now the trade tension between the US and China seems to have spilled over to technology as well. US President Donald Trump signed an executive order on Wednesday that will restrict Huawei and ZTE from selling their equipment in the US. The Department of Commerce has also put Huawei on a blacklist that could forbid it from doing business with other American companies. Derek Wallbank of Bloomberg News brings you this update.
It's not too surprising. I think the full culmination came a little bit quicker than people thought, but to be sure, we saw some headlines yesterday that said that the White House was going to move to restrict Chinese telecom in the United States. They made that action today, and then momentarily thereafter, they named Huawei as one of these companies. What this basically does, in short version, is it says that Huawei has certain actions that it considers national security threats, and as such, the U.S. requires you to get a license if you're going to take some action involving Huawei. And it's just enough of a complication to mean that it's going to make Huawei's life very, very, very difficult in the United States, particularly as you're talking about a 5G outbuild that Huawei has been, looking to do. And I think the other thing that's critical to mention here is, look, Huawei is one of the biggest shining stars in the Chinese tech universe, and it's a company that China takes incredible pride at. And you saw the reaction from within China when a senior Huawei person got arrested in Canada. Just imagine what's coming now.
All right, imagine indeed. Implications, everybody has different expectations about the implications of the trade war. They're wide-ranging, but here's Morgan Stanley's chief economist, Chetan Iyer, who expects the escalation of trade tensions to push the US into a recession. He also expects global growth to fall below 2.5% in 2020 due to these trade tensions. Listen in.
Yeah, so in our base case, we're assuming that there is a possibility that both the countries come together and there is a deal in 3 to 4 weeks' time. If that doesn't happen and trade tensions escalate to a stage where there is additional tariff of 25% on the balance imports from China, calling it the 25% tariff on all imports from China, you are taking a huge risk. We think you will probably in that scenario see a recession in the US, see a recession in global economy, which is basically the global economy will reach below 2.5% year-on-year growth by 2020. I think the big picture, what we are saying is that there are two key forces at play right now. First is that we have this policy easing from the Fed's pivot in the last year, basically in December, brought the financial conditions to be easier by 100 basis points, and China did a stimulus of $250 billion. So that's on one side. On the other side, you have these trade tensions. Now, where we are different from consensus is that everybody, if you see all the analysis on trade tensions, is on what is the impact on growth on a direct basis because of tariff. But what we are highlighting is don't miss the point that trade tensions are really having a serious impact on corporate confidence, serious impact on CapEx.
And we heard this from John Williams yesterday at Bloomberg.
And that part is underestimated. And so when we have seen such a massive collapse in capital goods imports globally, that's the most transparent CapEx indicator. It was growing at 21% first quarter last year, nominal dollar basis, and right now it's contracting 3%. So if you get these trade tensions escalating more than 3 to 4 weeks, that's the one that's going to tip the global growth towards a slowdown.
Now, definitely signs of concern there, but emerging market veteran Mark Mobius expects countries like India and Brazil to remain insulated from a trade war. Here's listen in to some of the countries where he finds value.
If you look at the trade in Asia generally, the biggest trading partner for most of those countries is China. So if China is going to be importing less, all of these countries are going to be hit. So we have to be very cautious in looking at each and every company in those countries to see whether they're going to be affected by the situation in China.
So Mark, give us a sense of the time frame that you think about when you talk about investing, and particularly when it comes to the China-U.S. trade dispute. If this goes on indefinitely for an extended period of time, are there opportunities in, for example, Southeast Asian countries where there might be supply chains that are altered?
What we're looking at is places like Vietnam, places like Bangladesh, where a lot of the Chinese manufacturers are moving their production. So you have a very interesting situation where, okay, exports of low-cost goods from China to the U.S. are going down because of the tariffs, but that is being moved to these lower-cost countries. So that's where we would be looking to see opportunities for exporters, at least, in these weak currency countries. Then further afield, we're interested in places like Brazil because there's lots of reform going on there, and India. Those are the two countries where you're not going to be very much affected by what's happening in China and the U.S.-China trade disputes.
All right, well, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, will you hazard a guess as to what's going to happen over the course of today?
Isn't it becoming even tougher to guess as to where the markets are going? Yesterday we began on a weaker note. Eventually, we saw a lot of volatility, and we know what's happened. And today is not going to be any different, and you cannot go by what we are seeing in the SGX Nifty futures because that's just the way things are going to pan out. For now, indication of a positive start, but you never know. A lot of things can change over the next 2 hours. We did end the Nifty in the red. We saw weakness in the mid cap and the small cap indices too. When it comes to the Nifty banking futures, or rather banking index, again we're looking at weakness. The PSU index down 1.8%. And in terms of stocks for now, it's a mixed picture. So perhaps could be a little bit of a positive. Tata Motors and HDFC Bank down. On the other hand, gains for Infosys and Dr. Reddy's as well as ICICI Bank. Now let's move on and talk about your FIIs. And again, the steady outflow from FIIs continues. Another 1,000-odd crores gone. And DI is not matching up to the net sell figure for FIIs. But as far as your contributors go, it was another down day of trade. Yes Bank taking a massive hit. And so was the case for something like an HDFC, IndusInd Bank, and Tata Motors. Not too supportive of the indices at this point in time. But moving on, in terms of your futures and options space, unwinding continues. And this is the longs made in, the last 3 weeks. Those longs have now started to unwind over the past 2 days. And yesterday wasn't really too much of an exception, 3% decline there. And as far as the Bank Nifty futures are concerned, about 0.5% decline in the open interest. But as far as open interest goes, in terms of distribution, we do have the 11,300 mark, which is the one with the maximum open interest. That's the call. In terms of changes in open interest, no prices for guessing, writing around the 11,000 put and unwinding in the 11,500 put. It was essentially the puts which were most active. That brings me to the India Volatility Index, because that will give you an idea about what's happening with your price option prices, and another 6% rise at 28, very, very high levels, and almost at a 4.5 year high for the India VIX. The Nifty put call ratio as at 1.13, not much has changed there. But in terms of stocks, we are watching out for something like an SRF, DCB Bank. Jubilant FoodWorks recovered all the losses that it had made day before, of course on the back of earnings. But Union Bank, looking at a 10% decline. And finally coming down to stocks which saw unwinding, Siemens, Bharti Airtel and Manappuram Finance. So again, Alex, it's going to be another mixed day of trade. There's no doubt about that. And considering we are inching towards the end of the week, but more importantly, the last phase of the elections, there just may be some more volatility in store for the markets.
Absolutely. Thanks so much for that, Agam. Well, volatility is going to be the name of the game. Let's head across now to Sue Keenan, who has the top global news for you in the First Word headlines.
We start with U.S. factory production, which fell in April for the third time in 4 months, led by weakness in machinery and autos, all adding to signs of a slowdown. Manufacturing output contracted by 0.5%. That's according to Federal Reserve data, and missed all estimates in a Bloomberg survey. Now, the report shows factories losing momentum as the trade war raises prices and complicates business decisions. A new satellite image, meanwhile, seems to show a Saudi oil pumping station completely intact after all the claims that it was attacked by armed drones. Now, the image from U.S. company Planet Labs shows 2 black marks near the point where the cross-country pipeline passes the facility. The photo was taken on Tuesday after Yemeni rebels said they had struck the plant. The attack caused a temporary shutdown of operations and follows Saudi claims of separate attacks on 2 oil tankers. To Indonesia now, the country posted its biggest trade deficit in at least a decade. This is plunging exports, added to pressure on the rupiah, and also give policymakers more reason to keep rates on hold. Exports dropped 13% in April from a year ago, while imports fell more than 6%. That pushed the deficit out to $2.5 billion, and that's far wider than the $509 million shortfall, I should say, seen in a Bloomberg survey. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
The deal between Tata Global Beverages and Tata Chemicals has been finalized, in which Tata Global Beverages gets Tata Chemicals consumer business in exchange for Tata Global Beverages shares. Now, what Tata Global Beverages gets from Tata Global essentially is, it's salt business, spices and lentils, and thereby we will have Tata Global Beverages, which will eventually now house tea, coffee, water, salt, spices and lentils. Of course, it will be an expanded play and a complete consumer play. More importantly, it is to note that Tata Global Beverages will be renamed Tata Consumer Products. That will be the new name of the consumer company. And as far as the swap or the allocation is concerned for shares, for every 100 shares held in Tata Chemicals, the shareholders of Tata Chemicals will be allotted about 114 shares of Tata Global Beverages. Now, if you consider the way valuations stack up, according to this deal, the consumer business of Tata Chemicals is valued at 5,800 crore rupees, and this is slightly lower, or perhaps quite lower to what at least HSBC, at least one broking house, HSBC, puts the value for the consumer business at around 7,800 crores. So there could be just a little bit of a challenge there. But on the whole, well, we do know that because of transfer, there may be a lot more in play in terms of the value that the consumer products division brings, and also the fact that the consumer products division was misplaced in the Tata Chemicals portfolio. That said, on the whole, the deal's finalized and waiting for final approvals as far as the deal goes.
A steady set of earnings is what we can expect from Bajaj Finance. It's expected to report an NII figure of about 3,262 crore rupees. That will be a growth of about 38% on a YOY basis, and profit is expected to come in at about 1,092 crore rupees. That will be a strong growth of about 52% on a YOY basis. Its AUM growth is expected to be around 37% on a YOY basis and about 5% on a sequential basis. So it will be slightly lower from the figure that we saw in third quarter, but third quarter was a much more stronger growth, mainly because of the seasonal factors. But in this quarter, it's still expected to be a very decent and a steady growth for the company. Other than that, the AUM growth will be primarily led by rural housing and consumer segment. When it comes to the cost of funding, the incremental cost of funding is expected to be slightly better from what we saw at the peak in Q3. And despite that, the margins are expected to come down to about 11.1%. versus about 12% on a sequential basis, again mainly because of the seasonal factors. Other than that, the cost to income ratio is also expected to decline for the company meaningfully to about 35.4% versus about 39.4% on a YOY basis. More importantly, it will be interesting to see how the company does in terms of its market share gains and also in terms of its overall cost of funding, what it actually reports, mainly because of the fact that some of these better placed NBFCs might have done better in the tight liquidity scenario, and the commentary that comes out from the management on what they make out of the entire liquidity crisis and the state of NBFCs, that'll be interesting to look forward to.
Well, we're not typically expecting a good quarter coming out from Hindalco. If you look at the top line growth, that is expected to be flattish out there for the quarter ended March. The numbers that we're working with is around 11,532 crore. Profitability of the company on standalone basis, excluding the Utkal unit, that's expected to dip by as much as 35% at a number of around 243 crore. That's mainly on account of the operational performance, which too is expected to see a decline by as much as 22% with a number of around 976 crore. Margins are expected to contract. If you look at the Utkal division, the EBITDA performance or the expectation that we have from that division, including the Indian division, that is to the tune of around 1,430 crore again, which is a downtick of around 11%. That's the Kotak estimate that we have. If you look at the other estimate, that is the Edelweiss estimate that we have, including Utkal, the EBITDA is expected to be around that 1,420 odd crore. Net, we're not expecting good numbers coming out, at least on the operational front for the company, on account of the decline that we've seen in the aluminium price. It shouldn't come as a surprise. 5 to 7% downtick in LME aluminium prices year-on-year basis, but then that to an extent would be offset by the favorable hedging policy or the favorable hedging contracts that the company has. Apart from that, the lower cost of alumina too is expected to aid the performance of the aluminium division as a whole. If you look at the copper division, we're expecting a 10% decline in that division itself. In terms of Utkal division separately, though the company doesn't give a separate bifurcation, but that division is expected to show a decline of around 25% due to the lower prices of alumina. In terms of the subsidiaries, they've already reported the number. Novelis reported a good set of numbers for the March quarter. It reported a healthy growth of 12% in its EBITDA. The soon-to-be subsidiary, that's the Eldris Corporation, that also reported a healthy set of numbers, almost a 57% growth out there. A couple of things that we'd like to watch out for from the Hindalco earnings. One will be the lower margins in aluminium business, any kind of outlook that the company could provide thereon, hedging positions going forward, and the outlook on the base metal, especially in the light of the trade war concerns. Apart from that, we would be also looking upon the completion date of acquisition by the Novelis, especially for Alvarez, given the kind of European Commission roadblock that we witness right now recently with regards to the Tata Steel Thyssen Group, and also with regards to Hindalco. Right now, European Commission has on May 4 14th, stop the clock for its in-depth investigation. So that's one commentary that we like to eye out from. Apart from that, we'd be looking into the commentary coming in on Muri plant mishap, which recently took place on April 10th, which was also flagged as an ESG issue by many brokerages.
There are a number of stocks we're looking at today, starting with earnings. Phoenix Mills came in with a strong set of numbers. Their revenues are up 66% at 723 crores. Net profit is up 2.5 times at 228 crores on the back of an exceptional gain of 48 crores in the current quarter. Their other income is up 2.3 times at 33 crore rupees. Then we have Manappuram Finance, which also came in with good numbers. The net interest income is up 17% at 698 crores, and net profit is up 43% at 257 crores. The board approves to explore entry into micro insurance and to acquire 100% stake in Manappuram Asset Finance. Gulf Oil Lubricants came in with a weak set of numbers. The revenues are up 17% at 436 crores, and margins stand at 17% versus 16.8%. Jammu and Kashmir Bank came in with good results. Their net interest income is up 42% at 931 crores, and net profit is up 7.6 times at 215 crores. The last result we're looking at is Petronet LNG, which came in with weak numbers. The revenues are down 17% at 8,383 crores, and margins stand at 7.5% versus 8.4% last year. Their other income is up 71% at 151 crore rupees. Lupin is the first stock we're looking at in Stocks and News. US FDA completes inspection of Aurangabad facility from May 6th to 15th with 3 observations. Then Zuari Agrochemicals says on evaluation of market conditions and inventory position, one of the 2 granulation plants of the company will be shut down till further intimation. Lastly, we have Balaji Amines. They receive consent to operate by Pollution Control Board for expansion of existing products and addition of 4 new products at its Maharashtra unit at MIDC Chincholi.
All right. Thanks so much for that, Mishika. Well, there's a lot that you'll find on the website, bloombergquint.com. In fact, we're very close to the end of the election, the results, and you'll find a lot of coverage therein as well. Here's one story, in fact. The Election Commission on Wednesday ordered campaigning in 9 West Bengal constituencies to end at 10 p.m. on Thursday night, a day before its scheduled deadline, in the wake of violence between Bharatiya Janata Party and All India Trinamool Congress workers in Kolkata. Independent directors of various infrastructure, leasing and financial services companies are under the scanner of the Corporate Affairs Ministry for alleged lapses in carrying out their duties as financial problems continue to brew at the diversified group. All right, that's all you need to know going into trade today. Do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.